think that health is a really important part of having more time, because you can always make more money, you cannot make more time. Like, they made stupid returns on those projects, right? Like, wow. I'm talking 50-60% annual returns, right, over that time period. And it was a good time to be investing, right? You have to have a certain ability to be able to do that.
Yeah, that's why you guys are listening to this podcast, because wealth is just a tool, but time and health is the ultimate goal that you're trying to get 100%. Through wealth. Welcome back to another episode of Wealth Buster. Today we have an interesting guest with a net worth of 20 million plus, the one and only Quentin D'Souza.
He's a prominent real estate investor in Canada, and he's here to give us some insight on health, wealth, how to build your net worth from 1 million to 5 million in the next 10 years, and how to go about picking your mentor. So if you're struggling in any of these areas, you do not want to miss this episode.
Let's start with the first question. How did you lose? You lost 200 pounds?
120 pounds, yeah.
So when you lost that, and what inspired you to do that?
Yeah, so I had been a full-time investor for about, I would say, 7 years, and I had really focused on my my wealth side, and I was doing really great. And I did an activity called the Wheel of Life, and it's something that Tony
did that too.
Yeah, Tony Robbins promotes that a lot. Yeah. And I had broken my life into different sections, and my business, my relationships were all high, but my health was like a 1.
It's like a triangle instead of a wheel.
It was like a broken wheel, that health part was that piece. And one of the things that I kept thinking about was, like, I'm going to be the wealthiest guy in the graveyard, right? And so
when was that? How old were you when you realized that?
So this would have been like 4 years ago. So
4 years ago?
Yeah, it would have been.
That's right before COVID.
Yeah, before COVID, like 2019. So
do you think that would have changed your life if you didn't lose that 120 pounds? Maybe if you caught COVID, maybe something more severe would happen.
It's possible for sure. I think that I really did focus on health to a point where I am exercising every day. I go for a walk for 5K every morning when I get up.
Amazing.
I'll go to the gym for an hour. After that, I will often go for a walk in the evening for half an hour, 40 minutes as well.
Do you have pets?
No, I don't.
But you still walk. You walk yourself.
I should, with the amount of walking I do. Yes.
We're looking for a dog walker.
Oh my
god! You cannot afford me.
No.
But at the same time, I do. My kids have been asking for a dog, and I did have a dog for a long time. He passed away, and that was quite sad. Yeah. But no, I think that health is a really important part of having more time, because you can always make more money, you cannot make more time.
100%.
Right? And if you can, keep your health at a good level, you're going to add years to your life, and you cannot pay for that, right? So I think that was one of those pieces. And I looked at myself, how I was then and where I am now, and I feel 100 times better.
Yeah.
But you don't know back then how good you're gonna feel. So what was that trigger? Did you just wake up one day and be like, I'm gonna lose 120 pounds?
No, it was that Wheel of Life activity. So,
Wheel of Life activity.
So when I did that, and I kind of made that realization, and when I set goals, like after I've seen what the change that I need to make in my mind's eye, then I start to work towards that. And that's what I ended up doing, working towards that. It took me like a year and a half. I had, I started to change my diet. I started running. I did a 5K, a 10K, then a half marathon, and then I ran a full marathon.
Oh, you did?
Yeah.
That's awesome.
God, respect for that. How do you even run half marathon?
Yeah, the only running I do is my mouth. Let's see.
It's okay. I think we all know that.
I make it known.
So, no, it was definitely a mental challenge. Actually, after kilometer 32, it was very, getting my
wall kind of thing.
Yeah, I forced my body to do what my mind wanted it to do, and that's really how I completed it. And, I continued to work on my health ever since. And, and it's actually helped my business as well because I have more energy. I can deal with stress a lot more with all the buildings and businesses and things that I'm working on, right?
Yeah.
Like the stress level can get pretty high sometimes, and exercise is a great way of kind of reducing all of that
100%.
and making it easier to deal with.
That's amazing. Yeah, I feel like it's really important to talk about that aspect because like a lot of people, whether they're seasoned veterans in real estate or just starting out, you tend to get into this tunnel vision where you're just like looking towards your financial goal and everything else is a blur, whether it's family, friends, whatever it is. And especially health is usually the last thing that people think about. They'll just be sitting on a computer for like 8 hours a day, haven't eaten, haven't taken care of themselves, haven't gotten up. And it's like, you were in that grind and just, you were like, you know what, this is telling me I need to work on myself. And like, this is my biggest asset. Like I need to focus on it.
Yeah, you're right. I see that quite a bit amongst people who are wealthy, is that they are often so focused and driven that relationships fall to the side, health falls to the side, your spirituality may fall to the side, right? And it takes, somebody to usually jolt you, or some tool or somebody that you trust to kind of jolt you in a different position.
Intervention kind of
thing. And then you need to and then that change, whatever that is, helps you to move in a more positive direction for yourself,
100%.
right? Yeah, you're not going to be able to take anything with you, so.
No, 100%. Yeah, so for myself, like personally, like a few years ago, I want to say 2020, is that good? Yeah, like in 2020, I definitely fell into that. Like I gained 40 pounds during COVID. Like I was above 200 pounds, which is not a lot, but for my build, it definitely is. And it got to the point where like simple things like just taking a walk would have me sweating. And like I was just not in a good physical, healthy place. And it wasn't until I lost all of it that I realized like how much weight I was carrying on myself. Like it was so much. Like I would hear like my blood pressure rising, like my heartbeat is in my ear and I'm just doing something like a jog. And it's like nowadays I'm able to now manage my stress better because exercise is a phenomenal way to release that. And yeah, like even confidence wise, like you do your best work when you feel the best. That's just what it is.
Yeah. And I'm a very goal focused person. So the marathon actually helped me to lose weight because it was the focus of the goal that helped me to do it. So I last year I did Machu Picchu, the Inca Trail with my oldest son.
Yeah.
And
is it banned now? Like they don't allow it anymore, or is it still open? Or they reduce the amount?
They reduced the amount. They closed it for a little while because of the political unrest, and then they opened it up again. But last year in June, I did that with my son, and that goal again, just to do that trail and do it with him.
Give us a context. How long? How many kilometers? How many days? Give us a context.
So Machu Picchu was like a 5-day hike.
Wow.
Right, and that was
how many steps per day, or how long we're walking?
Like sometimes it wasn't the amount of like steps. So you could do 5,000 steps, but if you're going up Dead Woman's Pass to 17,000 feet, you're like,
it's an incline. It's going to be a struggle.
It's
a lot of work.
Yeah, it's a lot of work. And then coming down afterwards, your quads are on fire because you're always going down, right? Kilimanjaro in February, that was the hardest thing I've done, harder than the marathon for sure.
Why is that the harder than marathon?
Well, it was like, there were some days that you were hiking for 20 hours in a row, and it's just a lot of like effort to go up. And, I did like a 7-day hike, and that one was really, it went from positive 20 degrees Celsius to minus 20 at night. And the summit night, you're waking up at 11 p.m. and then you're hiking from midnight until 6 in the morning so that you can see the sun rise above the clouds, looking down on everything from the top. And it was just spectacular, right? Wow. I got such a real amazing high from doing that, but also the accomplishment of having that done.
100%.
And I went with friends, so that was really good. I did the Camino with my youngest son in Spain in July. So he's 16 and he realized that my older son had done the Inca, and he's like, I want to do. So we did 110 kilometers on the Camino, walking together.
Wow.
And it was just him and I, and like we not really planned, just like walking 20, 25 kilometers a day together, listening to his music. It was really fun. And now I'm planning Everest base camp in May next year. So that'll be, and that one's longer. It's like a 14-day hike.
Yeah.
So, and again, very much temperature variations like Kilimanjaro. So all of that to say that I'm very goal focused, and having that goal helps me to want to prepare for it. So the byproduct of that is losing weight, staying healthy, exercising, because I know that I have a goal coming.
You don't
up.
want to be a burden too, right?
Yeah.
Yeah, I don't want to be. I don't want to be the last person in line, right? When we did Kilimanjaro and climbing at at 1 a.m, they broke us into two groups: the fast group and the slow group. I didn't want to be in the slow group.
No.
I was in the fast group.
Good.
And we got up there in time to see the sunrise, and it was amazing. But like that was like, I'm not gonna be in that slow group. I'm gonna be in the fast group. We're gonna get up there. We were passing people on all the switchbacks going up to make sure they were there on time. It was really cool. Yeah, it was fun.
With Kilimanjaro, I don't know too much about mountains, so please correct me, but was there some sort of like altitude pressure, like a preparation that you had to do beforehand?
Yeah, I had some altitude sickness.
Oh, wow.
So, I was drinking a lot of beet juice, so it actually helps with your circulation.
Nice.
I had some candies. I was prepared. Like when you go on a climb, what happens is you hike higher, and then you come down and you sleep lower. So you actually travel up higher, and then you come down in order to
adjust to it.
Yeah, adjust to the altitude. So it takes time and days to do that.
It's like going up, coming back down halfway, going up, coming back down halfway kind of thing. Yeah.
And that allows you to tune to the altitude. But
100%.
People were sick. One lady lost sight from the pressure in one of her eyes. When she was up there, a lot of injuries from climbing, lots of strains and sprains. Some people, you as you're walking and climbing up, you see people, you see other people like just passed out on the side of the mountain, having to be taken down. You see other people like injured. Like one guy, I'm not sure what happened to him. I just saw him go back, and he hit his head on a rock. That was it. Like. It was, and this is as you're climbing up, right? And it's very
humbling.
Humbling it's very
100%.
Very challenging, very humbling for sure.
So, what type of people join those climb?
All types of people, right? It's I think it's just people who want to challenge themselves in different ways.
Are they older? Are they younger? Are they
usually it's all ages? No.
Yeah.
Different kind of wealth status, or they're more driven. Like what are the top traits that you see in those people?
That's a good question. I think that there are a wide variety of people in there. There are single people. There were couples that were there. People who have the time to remember. You're giving up like 20 days to do something like that. Like I did a safari after I did the climb.
Where?
In Tanzania.
Tanzania, okay.
Yeah.
I heard beautiful things about it.
Yeah. So
big migration.
But you have to have a certain ability to be able to do that.
Yeah.
That's why you guys are listening to this podcast, because wealth is just a tool, but time and health is the ultimate goal that you're trying to get 100%. Through wealth.
Yeah, absolutely. That's if you have that time freedom, then you can do all the different things that you want to do, and you want to build your business so that you can do that and hire the people that help you to do it, right? Yeah. That way you're not often getting stuck in the business all the time, right?
Yeah. But that's really awesome. It sounds like, you're passing on that importance of health to your kids. Like that's a really cool bonding thing to do with them,
Yeah, for sure.
They're
really good on top of their health, and they're doing really well on that. So I'm really happy with how and it's just spending time with them too. I think that like, where I came from, I didn't really have a great, time growing up, you could say.
Were you an immigrant in Canada?
Yeah, so we
when
came
did you come to Canada?
When I was 3, so in 76.
Okay.
Right, and so it was like I came from Fiji, so I was born in Fiji. I'm a dual citizen actually.
Nice.
From
Isn't that
Fiji.
where people want to go? And
Except if you want to die from a coup or something like that, but whatever. There's been a couple of military coups.
That you have to get over just that part,
Yeah.
Cody.
So, but it is beautiful. Don't get me wrong.
Yeah.
It is a beautiful country, but it's very corrupt.
Yeah.
Right. And I think sometimes we don't see the other side of things because we haven't been to those other places.
yeah,
So
it's different when you're
appreciate
traveling
it.
or when you're living.
Yeah.
Yeah.
Right? It's different.
Yeah, so I mean, we came when we were young. Like when I was 3, I mean, we lived in like somebody's basement. So when we came, we had nothing. Typical immigrant story. We lived in a basement on a bed, unfinished basement under the stairs. So it was like you could see the stairs as you're going up. You know.
Wow.
So and then we lived at Bathurst and Finch and like some apartment buildings there.
Yeah.
You know, when I was young, you know, it was really tough with my dad was not a really good dad. You know, a lot of family like violence that happened in there.
Yeah.
You know, I didn't really have a good relationship. So, you know, I always worked. So like when I was 10, I started paper route, and then I ended up with 3 paper routes, and then I got my sister involved, and she would like put the flyers in the
that's
paper for me,
awesome.
and then I would go and like, you know, take and do my route and get that done. So I did a lot of that. I was like a dishwasher. I worked as like when I was 12, I worked at a Greek restaurant at
You're
Leslie
working a
and Finch.
cash deal before that's even a term.
Oh no, they paid me, but it was like $4 an hour or
Yeah.
something
Cash,
like
right?
that. Yeah, it was good. It was fun, and I mean, the people were good that you work with, but it was tough work, right?
100%.
So I never shied away from hard work. When at university, I paid for it through tree planting. So I would
Tree planting?
yeah, I would go during the summer. I would plant like, you know, 1,000, 2,000 trees a day. There were
Where
like
do you plant
Wow.
them?
Northern Ontario and
Interesting.
in BC. So
you
I
still
did it for
doing
4
that?
years. Yeah, I'm pretty sure you can still
Okay.
do it. It's tough work though, right?
Yeah.
You're
It's kind
working.
of like landscaping kind of thing.
Yeah, you wake up at 5 a.m, you have breakfast, you're planting by 6, and you work until like 5, 6 in the evening.
Wow.
And you do that, you know, for 5 days a week. And, you know, depending on where you are, like you'd have an isolation contract. So you'd be out in the bush and there's nothing for like 4 or 5 weeks until you get back to civilization.
Wow.
So, you know, that it was tough work, but it was good money and, you know,
Yeah.
it helped to pay for school.
Yeah, that's
And-
interesting. That's the first time I heard someone who done that to pay for their tuition. Very
It worked, but it also taught me that I don't want to do physical
that.
labor for
Yeah.
for money.
No,
Like,
100%. You
you
did
know,
what you had to do.
Yeah, you do what you have to
Yeah.
do to get it done, and you know, got through university, went to teachers college, became a teacher, and then I took on. I would always do side jobs, so I worked as a consultant. I did some coding, like HTML, and you did websites, and you know, I had a website for a long time, free stuff for teachers. I had like. And this was like back, oh God, this is like 20 years ago, and when there was not many websites.
Yeah.
And I had
How
like,
old are you now?
I turned 50 this year.
No
50,
way.
So,
Yeah, so
so 30 years ago, that's my age. Okay, you're younger than that, yeah.
so like I had like 20,000 subscribers on this list, and you know I ended up. But the problem was like,
Oh, what
you
are they
can't-
subscribing to?
Yeah, free stuff for teachers. So basically,
Free stuff for teachers.
you can't sell anything to people who expect things for free.
Yeah. That is true. That is
So-
true.
Okay,
So I did not realize that when I started that
Yeah.
site. The value was in the list, but
That's
at the same
hilarious.
time, I was like, oh man, this isn't going to work anymore. I'm like, I spent a lot of time doing this, right?
So
I
you-
learned a lot.
you were
Put that on
sell-
a t-shirt.
you were selling like software for a teacher. Why would teacher need those?
So it wasn't that. So what would
Yeah.
happen is like lots of government agencies, lots of businesses will give stuff away to teachers in the hopes that they're going to be using their products,
Yeah.
show them
Got
to
it.
other people.
Kind of
that sort
ambassador
thing.
kind of thing.
Yeah, you may get
Got
like
it.
free water kits or things like that. And so
Yeah.
I would have hundreds of these items that teachers could go on and order for free.
That's
and
so
then
cool.
And then so they would do all that.
That's very
and then-
interesting. It's kind of like a free marketing for the company. They put in a budget, and they know that if the teacher can broadcast for them, it get to the ground level at a very young age.
Right. Yeah,
So
absolutely.
they kind of ingrain it when they're like, when the kids are sponges, right? So when they grow up, they're always thinking about that product now because they see it so many times. Is that what they're thinking?
Yeah, some of it was like that. Some of it was just like, you'd have the National Energy Board
Yeah.
want to they have like messages that they want to give out and, and there are things like that. And you have different, and so you had to be careful
Yeah.
what you're promoting and what you weren't. But I mean, at the time I was just learning about doing it, putting it together and, and then I kind of realized this isn't going to work for me.
Doing it
moved
for
on.
free. So
Yeah.
how long were you doing that for?
I want to say like 4 or 5 years. Probably.
You were 30-year-old and you did it for 4 to 5 years for free.
For free.
On the side.
Wow.
To learn.
Full-time
To
job
learn.
as a teacher, and this
Yeah.
is on the side.
Yeah,
You're just doing
and
your
I
own
was taking
programming.
my master's in education at the same time too.
Master in
That's amazing.
education.
Yeah,
When
it's
you did that?
I did that in my 30s as well. I took my master's and got
Is that at a university or?
yeah,
Okay.
York University. I did my
okay.
master's of ed. And so like I have my principal qualifications. I never did it because I felt like it was middle management instead of having some more direction than I thought
Yeah.
when I started that program. And then in 2013, I left teaching altogether and to focus on real estate full time. But I had, in 2004, I had started investing in real estate. And,
Nice.
by the time, and I had been doing a lot of other things, like I had done investing in stocks, starting the, different businesses like the.
Can we talk more about that? Like we
Yeah.
have quite some real estate investors. We'll promise you we're going to get to this point. Like in case you guys don't know, Quentin has 580 units and on the multifamily side, and he has still 13 legal duplex that he doesn't know what to do. There's a lot of equity in it, but it's debt money, not making the highest ROI. But before we get into that, like I think our audience really like to hear like when you were trying out different businesses, right?
Right.
What did you try out? What was the experience like, and what did you learn? Like,
Yeah.
other than this, right?
Well,
Other
the
than-
free stuff one that was kind of crazy. I mean,
and what did you learn from that?
Well, you can't. Actually, what I learned was the value was in the list.
Yes.
So the value was in my mailing list. That's what I learned from that whole business.
Because you get all the company's key marketing email list.
Well, it's the teachers, right?
It was the teachers.
Yeah, you got
Teachers.
their
Right?
information.
So all of a sudden, I had all the data from those teachers, and that
amazing.
was valuable. So I did learn that. I learned how to code HTML and some JavaScript, and to
Nice.
do a lot of stuff like that. I did a little bit of PHP programming and things like that. So I learned from that. I also, I did other businesses. Like I had a landscaping business.
Oh, really?
Where I would do lawn cutting and do cleanup and stuff
Nice.
like that. When I was like 13, 14 as well. So I had
2013, 2014?
no, when I was 13 or 14.
Oh, okay.
It was like, yeah. No, was it that? Not at that time, but yeah. So I've done different things over my life, and I kind of learned what I do and what I don't want to do, and I figured out that leveraging different things is a better way for me to be able to make money than doing things on my own.
Yeah.
And having to earn it by working on it with my hands.
100%.
So, like leveraging lists, leveraging other people, leveraging assets, leveraging, investments, leveraging different things is how a better way of earning funds rather than working per hour for
Yeah.
somebody else, right?
No, 100%. Was there something that kind of was a catalyst towards you, like starting to invest in real estate? Like, did it just kind of happen when you were looking for other ways to make money, or was it something,
I think I had I'd brought it was more like you buy one and you were like, oh, I bought this and it was like 200,000 and now it's worth 400,000.
Yeah.
And I didn't do anything and it was like 3 years later and this is like more than I earned from my income from
Yeah.
working for the last
Yeah.
same amount of time. So, I mean, that's when I realized that this is something that could be leveraged and
That's
useful.
awesome.
And then that's kind of started down that process. Really, 2008 is where I started to scale it, buying,
Yeah.
4 or 5 properties a year. And then by the time I got to 2013, it didn't make sense I had to choose really, keep doing what I'm doing with my job and just hold on to what I have, or grow my real estate portfolio and get rid of my 9 to 5, which was taking up too much of my time.
So between 2008 to 2013, you said you were buying 4 to 5 properties every year. Were you doing it on your own, or do you have a leverage system already set up? Because a lot of people may be like, wow, I wish I can buy 4 to 5 property at the current price. It's less likely to happen. But back then, what did you learn that 45 years to the point where you're like, I have to choose whether I'm going to do it full time but how do you go through that 4 or 5 years? Did you have any type of leverage?
Oh, lots of leverage for sure. Leverage in different ways. So, I mean, bank leverage was different then too, right?
Yeah.
So you could get 40-year amortization, 100% financing on rentals.
Yeah.
You could put 5% down on a rental property and still cash flow $100. And you know, so that was good. And I started to do a strategy that I thought I had invented in 2009. So like I would buy a property that needed work, I would fix it up, then I would refinance it, and then I would rent it out, right? And so that was in 2009 when they had changed a lot of the mortgage rules.
Yeah.
So I thought I had invented
burring.
Yeah. And so and then I met a couple other guys, my buddies Jeff Walker and Jeff Woods and Andrew Brennan. And they were doing the same thing. I'm
That's
like, how'd you figure this out? How'd you do? Right? And so, and they were in different areas, right? So it was kind of neat. But, you know, that's how I started. And I would do that. And then what ended up happening is I told like my friends and family what I was doing. And then people wanted me to do it with them, right? Because they were like, well, you're already doing it. I'll give you the money. You do it. And then, you know,
you split the profit, or at least learn it. If they decide they want to do on their own, but most people decide,
I never did it with people who wanted to do it on their own.
Down the road, though, there might be people want to do that.
I always stayed away from those people because they were wasting my time. Like,
no, 100%. You got to collaborate. You can always learn. And
you do what you do best, whatever it is. So if you're a business owner, be a business owner. I am the real estate investor in this relationship.
Exactly.
If you want, we can partner. If you want to learn, go to somebody else. Go hire a coach. Go take a program. Go do what you need to do. So at that time, I was very specific because I could get financing that was 95%, right? So I think that
is it because of your full-time job that you can get that kind of financing, or just a lot looser?
Yeah, so what happens in financing is the same as like money cycles. Everything is a cycle. So it moves like a pendulum from one place to the other. So back in 2008, I would say the pendulum was way swinging to one direction. So it was a lot easier to get financing. They were looking at the property. If the property cash flowed with 100% financing, they would lend all day, right? And so you could continue to do that. Now, fast forward today, the pendulum has swung in the opposite direction, very far in the 100%. Opposite direction. So what happens with credit cycles, like lending cycles, is that now there is less credit available. So the cost of that credit is going to be higher, and what they are going to want for leverage is going to be a lot lower because they want more security.
100%.
So, and the pendulum will always swing in different directions, right? So at that time, it was easier to get credit. It was easier to buy properties that made sense. It was easier to find people that would, know, like, and trust you, and saw that you were doing, saw the success. Like the type of things that I've been able to do with my friends and family that I was working with. I mean, I'm so grateful for them trusting in me to do that, but their returns were like stupid. Like they made stupid returns on those projects, right? Like I'm talking 50, 60% annual returns, right? Over that time period. And it was a good time to be investing, right?
Just for people's context, when you put 5% down and you refinance all the money out, 50 to 60% is actually conservative, because if we don't have money in, what is the return?
Infinite.
It's infinite, right? But like nowadays, you at least put 20% down. Banks might want to see 30%. Like you said, the credit cycles are the way they want to deleverage and all that.
Yeah.
So the returns not as high, because if you only put 20% down, it's 5 times leverage. So you're like, oh, hold on, 50% is really risky. But you're like, technically, the house only went up by 10%, but because of the leverage.
Yeah, and you know, that's, and like when back then I was doing like 1 to 4 unit properties, so townhouses, duplexes, stuff like that. And now I'm more focused on apartment buildings because I just find that I have the cash flow that I need.
Yeah.
I have the wealth that I want on this side. Now I want to focus on the net worth goals on the other side. And that requires me to spend more time on the apartment building side. So
you think apartment building is more a net worth generation?
Yep. Absolutely. 100%.
Can you explain that? Like,
yeah.
in what way is more of a net worth generation?
So you have so when you're dealing with a house, maybe you're dealing with $1 million asset, or actually maybe like $500,000 or $600,000, right? When you're dealing with an apartment building, you're dealing with like an $8 million asset.
Yeah.
So the asset base itself, based on growth, is going to grow faster and higher in an apartment building than in a house.
100%.
What happens in houses is that houses value is based on whether the house next door sold. It's the comparative value. Yeah. But an apartment building is based on net operating income. Yeah. So that and I can change that and increase my income, decrease my expenses. So for me, it's a more of a business than I find the houses. Yeah. So the houses, although you can treat it like a business, it's really about comparative.
Yeah.
Whereas apartment buildings are more business-like because of the net operating income side of things. Yeah. So I think it's a better wealth generator because your asset base is bigger. So like if I looked at my overall asset base is, you know, about 130 million in real estate assets. So, you know, of that, like I'll have maybe 25 to 30% is 100% me, and then another like, let's say 25 to 50% is, you know, with partners, 50%. And then the other, you know, whatever 25 to 50% is like with multiple GPs, where I have only like maybe a 25% ownership. So like from an asset-based perspective, if you look at it from like a grand scheme of 120 million, my question to you would be, if in 10 years from now, what do you think that asset base is going to be worth? Yeah. So if you look at a house, for example, okay, and you looked at 10 years ago, don't think in years. People are, excuse the day trading, right? Yeah. And they're thinking that they can, you know, buy a house and flip it and make money, which is a business on its own, right? But if you look at real estate in decades rather than months or years, what did that house sell for 10 years ago? What does it sell for today? I can tell you that a lot of the houses that were sold for 200, 250,000 10 years ago are selling for 800,000 or 900,000 now. Yeah. So if I have $120 million in assets, in 10 years from now, what do you believe that it's worth? Insane. Even if it's not worth, you know, 3 times as much as it was, but do you believe it's worth double? Do you believe it's worth 50% more?
Yeah. Usually real estate, even just in the regular market, usually double every 10 years pricing, right? Yeah. But if you only put in 5% down, 20% down, even 30% down, it's 3 times the leverage at least, right? So if it's doubling, 6 times your money. Yeah. That's easy math, right?
And I can see why you're saying it's like a net worth generator. That's like your focus for it. Because with single family homes, like if you rent it out to a tenant or you have like a whole portfolio of it, there's a lot of risk in that. Even one person leaving a single family home, like that's not net worth money. That's very short term. Whereas the way you're doing it, you're reducing your risk over a long period of time. And it's like just based on natural appreciation. It is that 120 million is going to appreciate. Like it will. And it's like, even like for myself, like I was lucky enough to buy my first property with $0 down. And that was like 4 years ago. It's already doubled in price. Yeah. And that was just within like the past 4 years. I can't even imagine in 10 years what that's going to be.
Yeah. So, I mean, that's why I think that from an asset-based perspective, and I also bucket my money too. So like the way that I think of money is in different buckets. So I have I have cash flowing real estate. So I have some personal assets that like, so I've got like some duplexes, even 2 singles.
Yeah.
That still cash flow a ton because I haven't highly leveraged it. Right. And so those, I still make, about 8K pure cash flow off of those properties. And then I have properties that are all in my corporation, right? A different bucket of money, different type of money, because that's what I'm looking to grow my net worth from. Then I have assets in the U.S., right? So I have 4 properties down in the U.S. that are direct ownership properties.
Yeah.
And then I have different investments in the U.S. That's are awesome. Different, right? So different buckets of money. Then I have I run Durham REI, right? And we have members who join and get education around real estate investing. So I have some books, so people can, so all of those are different buckets of income that come in to me. I have private lending, like I've lent out hundreds of thousands of dollars on private lending. That's another avenue of income that comes in.
So it seems like you diversified that like really well. So like dependent on if you want short, medium, or long. I know that's something that you've mentioned before. It's like you've really tapped,
medium, slow money.
Yeah, you've tapped into all of those. So regardless of market conditions, like you're most likely going to be okay in those. I think that's amazing.
Yeah, and like the fast money is good too, because like you want that for income generation.
100%.
Right? You want to get that's what I would call active business income generation. And a lot of like flipping, wholesaling, like even rent to owns, those are all active business, Airbnb, those are all active businesses, right? Whereas like the long-term rentals, apartment buildings, storage facilities, industrial land.
Yeah.
Like those are all long-term, bigger types of investments where you're looking for something else. And that's how I kind of picture things in different buckets. And that way, if I ever have to get rid of a bucket, like, I get bored of coaching and get rid of it. If I don't want to do like private lending anymore, I can get rid of it. Like it just allows me to have different options for what I do and when I do it. And I have time freedom because I choose who I want to do a podcast with and who I don't, right?
That's amazing.
So, so I think that like for me, that's how I like to look at things and what works. And I mean, I'm not really like, I have my truck outside. I don't have a lot of like expensive tastes. I like to travel a lot, which is my thing, right? But like, I think that I've always kind of lived within my means type thing. I never really I have partners who have McLarens and things
I think
like
I know
that,
who
which
that
is
is.
which is fine.
He will come on soon.
Yeah, but like people,
he was going to come today, but he couldn't make it.
Yeah, but people have to do what they like. The reason why they invest is to have those things.
Yeah.
Then that's great. Like good, But for me, like that's not my thing. Like I would rather spend time with like my kids and go for a 2-week trek somewhere and just spend time with them. Like we took the whole family. We went to Alaska. We did a cruise. We took my father-in-law and went.
Did you see the whales?
Good. Yeah, we saw whales.
That's
we
amazing.
saw Ketchikan and like Juneau and it was awesome, right?
I would say that's expensive taste because you bought the most expensive and most valuable thing, which was your time. Like for me, it's like it's never about having Versace or Gucci. It's like I get to buy my time. That's a very expensive thing. Not everybody can do that, you know?
Absolutely.
And that was one thing I always told people. So when I used to work in the bank, I would give people advice on like how to look at their investments. And a lot of the times people are just focused on where they're headed next. They don't focus on what's happening now, and then they over leverage themselves because they're so focused on the next step. Whereas you're looking at where am I at now? Focus on building the short-term income. Where am I going next? Focusing on that short-term cash coming in, and then where am I ultimately headed? And that's the net worth generating assets. Like that's like honestly, like that's a really good way of putting that together because you're taking care of every aspect.
Yeah, and I try to like. There was a few things that I've learned over the years too. Is that like you have to choose your mentors carefully. Yeah. Like it's really important to choose them carefully because they can take you down the wrong path, and it can take you years to be able to recover from that.
Yeah.
And, I always look for people who are where I want to be in the future.
Yeah.
And I become friends with them. I learn from them. They are my mentors because, you know, they are where I want to be in the future, and, you know, they live the lifestyle that I want. Like I'm not the guy who's going to go out and be like if you're looking for the guy who's going to be like the womanizer or like the party animal, I guess it's not going to be me.
What do you mean? And you'd do that.
You know, like it's not going to be me.
That's Quentin's past life.
On the next podcast episode.
Uh-oh. So, but you know what I mean? Like and that's what you're looking for from the people that you want, who are your mentors. Because if they start to do that and it doesn't resonate with your personality or where you want to be, then that's not a really good example
100%.
of a good mentor for you, right? And not only that, but then their lifestyle, how they live, what they say and what they do. What you do is really important, right? What you say is great for, you know, saying marketing. But what you do is really important, and following 100%. Through. Like, you know, my word is my bond. People know that when I say something, that I mean it. That this is what I am going to do. I'm going to do whatever I can to make that happen. You can't control interest rates. You can't control the weather. You can't control, but you do, you know, to your utmost to be able to do what you can to make sure that you protect people and help them and do what you want to do. And so when you're looking for mentors, you want to see that they've actually accomplished that. They follow through with what they say. Yeah. And I think finding the best mentors is finding people who have already accomplished what you want to do and then learn from them.
100%.
Because should they still be in the game?
That's a good question. I think that they should for a certain percentage of it. Yeah, because if you're not in the game, you don't understand what's going on right now. Like, for example, CMHC recently changed their mortgage qualification rules. And so now all of a sudden you can't go from seller financing or a B lender directly to CMHC. You'd have to go to a CMHC approved lender, which could be a big bank or some credit unions or specific places for a year first before you go to CMHC. Somebody who's not in the business right now won't pay attention to that. Yeah. And they'll give you advice like, oh, just take on the seller financing because now you just go right to CMHC afterwards. Oof. Well, that's not the case, right? So I think you do have to have some skin in the game, continue to be in the business, and then be able to help them that way. The other side of things too is that truly somebody who is a mentor and is successful doesn't need you or the money. So usually it's hard to get their time, right? They don't really need your time. Yeah. And they have a filtering process. Right? Like I have got like a filtering process because there's people I have.
Oh, trust me. I know, Quentin. I know.
I apologize. Nada emailed me like multiple times. And
my goodness.
I ignored her.
Wow.
And then Cody texted me and I'm like, okay, Cody.
Yeah, literally. It was, to be fair though, it was for a previous job that I was trying to sell him on. So I don't blame him, but I still do a little bit.
You know, and I think that I guess the challenge is like trying to be able to look through what's out there and see the truth from what's not. Like it's really hard, and you have to ask some hard questions, and people have to be willing to share with that. And I think that can be challenging sometimes, for sure.
No, 100%. Especially nowadays, I find that it's very hard. Like even if I'm just on Instagram or I'm online, I see someone on LinkedIn and I'm like, oh, like their title is pretty cool. Like you look through all their history and it's like, I don't really know too much. Is this just like a perception? Like, what is this? Like, is there any substance to this? It's just very hard nowadays, I find, to like actually, unless you're going obviously to your REI group, you know, gonna do that plug for you right there. But it is in person nowadays. I'm finding that instead of meeting people online for mentorship, I'm going back to the old style, which is like meeting people, meet and greets, in-person meetings. Like, you can still do some stuff virtually for sure, but it's that one-on-one, face-to-face contact ultimately that is going to help you learn the best.
You know what's funny? I have a friend that's a wholesaler, and he's telling me that he is getting wholesale deals, and I'm not going to say who, from some YouTube stars.
Oh my God.
Partners. So all of a sudden, like, there are these YouTube stars that are doing like flips and different projects, and then all of a sudden somebody who's in their inner circle is selling a house for them through And it's
That's
just
awesome.
like very interesting, right?
That's community. That's like finding the right community for yourself. That's what it is.
But it's also not being successful.
No, but I mean, hey.
But the thing is, it's hard to tell. You would never be able to tell.
Yeah.
What it is. And if I didn't have that relationship with that wholesaler to be able to understand that, I would never.
Good or bad, there's a community for you.
Yeah.
Lesson of the day.
But finding your mentors, find the right mentors, and
Yeah.
and trying to figure out what works, and like go through the numbers. That's the best thing to do.
100%.
Because you can't hide usually by going through the numbers. You can see like, this is what I bought for it. This is how much I paid. This is what it's worth now.
100%.
Does it make sense? Is there trouble? This is why it's in trouble. Why is it in trouble? Try to figure it out. Right.
The math does not lie. Yeah. It's very logic and reasoning. Like there's nowhere to hide. Yeah. For real.
Yeah, absolutely.
So, just in case people don't know, Quentin do run Durham REI. There's actively 300 members, and you guys have a meetup every Thursday.
Every second Wednesday of the month.
Every second Wednesday of the month.
Yeah.
With the current high interest rate, some people said we might stabilize, come down to 4%. Some people said we'll stay here. Some people said we'll go higher. So how are you guiding your current members? Let's say they're kind of like yourself. Let's say they're between age of 30 to 50 kind of thing. They're like, I work a high income job. I make 100K. I got 1 to 2 property, but that's not enough to replace my full-time income. Yeah. Quentin, I want to expand. I want to get to the point where you want to get to. How are you guiding these people right now?
Well, it depends on what their goals are. So let's say your goal is to do that in 10 years from now. Mm-hmm. The goal for you would be to increase your asset base to a point so that 10 years from now, that asset base will be worth more, a lot more. And then you could liquidate that asset base to create income that 100%. You could use on an ongoing basis.
Yeah.
Maybe private lending, maybe you're doing stocks, maybe you're doing dividends, whatever it is. So you want to get that asset base as high as possible. So in this environment, I think what I'm doing, I'll just tell you what I'm doing is that I'm
not financial advice, pure opinion.
I'm liquidating some assets in order to create more liquidity, in 100%. Order to take advantage of opportunities that I think are going to be coming up in the next 12 to 16 months.
I agree on that too.
Same.
I'm on the same page.
Yeah. Capital preservation, that's where it's at right now.
Yeah, so I grab that equity so that I can reutilize it and redeploy it in opportunities. And right now I'm pencils down on acquisition because it is challenging to make the numbers work. If your cap rate is higher or lower than your interest rate, there's not a lot to do. But so what I'm doing is I'm looking at deals that make sense. There are still people that are cash flow positive on duplex conversions in particular areas like Belleville, like Trenton, like smaller markets. But the challenge with that is that there's always a cycle. Yeah. And as we get into price cycles, you'll find that those markets tend to recover.
Adjust more.
Yeah.
They go down faster and it takes longer for them to go up.
It's kind of like a growth stock.
Yeah,
go up faster, come down faster.
Yeah, there can be a lot of challenges with that, so you have to be careful.
Yeah.
But I'm still advising, like I've always done, is to buy for cash flow. Make sure that you can hold on to the asset for 10 years, not for 1 year or 2 years, and make sure that you're comfortable with being able to do that. And you can still do that today.
Yeah.
It's harder, but you can still do that today. And so I still continue to advocate that. On the apartment building side, I'm saying right now is the time to get educated, spend some money on learning about, take courses, read books, listen to podcasts, get educated so that you can be ready to move when the opportunities start to come up.
100%.
Right?
Yeah. And it's not like you're looking at a crystal ball to figure out when it's the time to act. It goes to market cycles. Like the pendulum is swinging exactly where the market cycle is at right now. Interest rates are high, prices are lower, it's very hard to get lending. Later on, when things pass in the market, it's going to go back up. It's literally like the same kind of cycle. It's very it's not predictive, of course, because we can't predict the future, but you can kind of have an idea of, hey, we've hit a bottom. Maybe it's going to go lower, but right now I want to buy a property and I can afford it. I'd rather have that than at the end of it, that opportunity passed by,
Yeah.
So you can kind of educate yourself a little bit on how to see those key indicators.
Yeah, you spend time learning about underwriting,
Yeah.
doing performas, being able to educate yourself on what to watch out for, who to watch out for.
100%.
You know, all of those things are useful, and this is the time to do that. It's to make sure that you gather cash, that you have the cash ready to deploy, you get yourself educated so that you're ready to move, and then you know what triggers will allow you to take action. Maybe it's a
100%.
price point. Maybe it's a cash flow number. Maybe it's whatever your trigger point is. You want to be ready to understand what that trigger point is. And then as soon as you see it in the market or in a particular property, you know, I'm going to take action.
Exactly.
So, but that all comes from preparation, right? It's sharpening the saw. You know, the more time you spend sharpening the saw, the easier it is going to be to cut, right?
100%.
And that's part of it, all that preparation.
Yeah, I started to learn a lot about those key indicators because a while back I fixated on market cycles and trends, and so I looked at historical data. And honestly, like to a degree, it's very similar, but it follows like the same trend, up, down, and it's like once you kind of have that knowledge to point that out. Obviously, I'm not going to be able to predict the prices tomorrow or, you know, if it's going to go up or down, but I am more well equipped now to identify that, you know? So if it does go up, I'm like, oh, okay, you know, things are going to get a little better. Maybe they're going to get worse, but at the end of the day, this property is cash flowing. I can afford it. I'm just going to execute on it.
So I have an interesting question for you. So
For her or for me?
for both of you. So what ends
For
up
her.
For me.
So I took this article from 1973 or 74.
We were not born. You know.
and I put it up on the screen.
Yeah.
Right? And it was from a house at Leslie and Finch. You know, Leslie and Finch in Toronto. And so it was a picture of a detached house, and it was new built, and it was for $40,000.
Crazy, eh?
Okay, so I went back and I took a look at the exact same house because it was built and it's still there, and it is worth $1.8 million. Okay, so it was worth $40,000 when it was built, and it's worth $1.8 million today. Okay, the house is the same house. What has changed?
Everything around it.
What has changed?
The market, people, I don't know what's the right answer. I'm just going to guess it all.
A lot of things. I think the demand changed.
Yeah.
The value of money changed. The access to credit changed.
People's perspectives changed.
Yeah, I mean,
Everything.
I'm going to pick on the value of the money has changed.
Yeah.
Yeah.
Because I think if you think about what has happened between 1973 and today,
Look at the quantitative easing.
we've done so much money printing, right?
Yeah.
In 1970s, we did a lot of money printing
Yeah.
actually. And what was the result of that? We saw inflation go up. We saw
Yeah.
lots of changes to inflation, right? And what did we do in 2020, 2021? We
more.
printed
Yeah.
50% of the money supply in 1 year. 50% of all existing money was printed in 1 year. That is huge. And if we think that we're going to get off with 3% inflation, I don't think that we're going to, I think that it's hopeful. I think that, you know, there's some real challenges. So if you believe that from 1973 to 2023, we've got $1.74 million change in asset value. What do you believe will happen in the next 10 years?
Oh, man.
I don't know.
What do you think will happen?
It's going to go up. That's what I'm hoping for.
He
So
owns
at least-
he owns the house.
So it sounds like you're still, even though with the current high interest rate, there's some opportunity coming up for the next 12 to 16 months. You're still quite long-term bullish in the market you're investing in. That's mostly east of Toronto kind of thing. That's where your duplex and multi-families are, right?
Yeah, my buildings are all the way up to Ottawa,
Kingston.
Cornwall.
Okay, Cornwall.
And then
as well.
up to Midland in Wasaga in the Bay
That's where
Area
Andrew Brennan is.
Andrew lives up there. Yeah.
Yeah.
So yeah, you know what? I think.
And what do you think is going to, what are the incentive to keep pushing up the price? Because they already print so much money. Now they kind of try to take it back. But you're still very bullish on this market. What are the reasons that give you that bullish feeling?
Well, first of all, we got to separate money from fiscal spending.
Yeah.
And what's happening right now is that fiscally, the government is not being responsible for
I just have a short form video about that. How do you fix that? If any time the Congress is spending more money than 3% of the GDP, they cannot get reelected. That's what Warren Buffett said. I just had that short form video come up.
But that's exactly it, right? Fiscally, we are spending more and more money, and it's requiring monetary stimulus to be able to support it. It's the first time that the Bank of Canada has to print money to pay for its debt. What does that say? That's a problem. I don't think people understand that. And the government keeps making more promises. I think the last one was like student loans or something like that. And I understand that it's appealing to people because it gives them something. But what you're being taken away is something that you can't see. And that's through inflation. Like your wages are going down. This is causing your wages to go
100%.
down, right? Because you can spend less. How much more does it cost you to go to the supermarket or to go on a trip or do whatever it is, like buy equipment, use Hollywood for whatever you need to do. It's costing more, right? So
in case people don't know, Hollywood is our best studio guy, keeping us all under control on time and all that. Yeah.
But I mean, but that's the thing, right?
Yeah.
So like you have to be careful for all of that. And I think we don't see that, the fiscal versus the monetary and what's happening.
But you're still bullish about it.
Yeah.
So why?
Because the government will always spend more money.
Exactly.
Because they all will always they will try to inflate their way out of this issue like they have for the last 50 years. That's what's happened since 1973.
This is the way that I see with the government spending. This is the way I see it. You know, when you see a cat that got stuck in a tree and people are like, oh my God, get the cat down. You're like, no. It got itself up there. It'll get down. That's the way I see it. It's like, they're going to get themselves in the situation. It's like, we can panic about it, but it's like, no. They got themselves in this. They'll get us out. That's just really it.
And everybody's going to be waiting.
Literally.
Yeah. So, I will give up a quick conclusion here, is you can disagree with me, is that we can complain about the current situation, how hard it is for people like myself and Nada, our age group, to come in, because a lot of assets it's physically owned by the baby boomers and all that. Millennials doesn't have a lot. The income did not catch up the asset price and all that. We can complain about it, or you can do something about it and get on this train, because 100%. According to Quentin, government will continue to print money to get itself out of the hole. So it's not stopping. There might be a small pause, but it doesn't, that's just the trend. And a lot of time the past performers do kind of predict the future in this case, especially when the human nature is involved. So you can complain about it. You can hate the landlords about it. You can hate this money gain about it, but unless you do something to take action to be part of this, you will get left behind.
You have to adapt.
I'll give you an interesting quote from Mark Carney, so former Bank of Canada governor, who was basically commenting about the change in values of houses over the last 20 years. And he said, he was commenting about the dip in house prices. He said, don't worry about the dip right now. This will look nothing like anything happened 10 years from now, right?
100%.
Like looking at the future. So what does that say? Former Bank of Canada governor, right? Yeah,
they probably own a lot of real estate too. This is a fact, I think.
He was like not even joking, and we're just like dying.
This is a fact check.
Yes.
Hollywood fact check.
Well, it's great to have you on. I don't have any more.
Yeah, thank you so much.
Thanks for having you on. It's a really good chat. Here, cheers with the Gatorade.
See you guys next time.